This hearing today was regarding HMDA data and HMDA analysis, and we want to thank you for bringing this oversight hearing to bear and calling the regulators into question and asking consumer groups to offer some of their thoughts and analysis on the 2005 HMDA data. Your district represents the Charlotte area, and we've recently released a report, which I think you referenced several times during the hearing, Income is No Shield. We'd love to hear from you more and your thoughts about the disparate treatment results that we found in that report and that analysis.
Well, obviously we're distressed at the findings in 2007. At this point in our history, there appears to be ongoing evidence of disparate pricing and if not overt discrimination in the lending process, and we're trying to get to the bottom of that to document that discrimination is an ongoing problem, which we obviously start out thinking it is, and then trying to figure out how you really effectively legislate or regulate through governmental agencies to eliminate the problem. And so I thought today's hearing was a constructive step in that direction.
Excellent. We realize there are no easy fixes, and that tomorrow we may not see the bill that's the panacea that's going to end all of these practices. But do you have any thoughts of what might be the most clear and evident use of the data or furthering the federal oversight structure?
Well, I express some concern that this may not be unique just to high-cost loans, just to subprime loans. If we find discrimination in other areas, we need to be reassured that the same kind of pattern doesn't exist in other areas. But one thing that I think is going to be absolutely necessary is for the Fed to expand the data collection fields that it has to collect additional data, perhaps cover additional players in the market, such as brokers and their involvement. We may need to do some revisions to federal statute that prohibit false applications to exempt testers, because obviously testers are at a level submitting false applications for loans, or so. I mean, there are a number of things that we can consider.
And in John Taylor's testimony, he referenced a few other data analytical territories. Age was one, income of the borrower, loan to value, credit score and credit standing. Have you given any, or will you be giving some thought to those possibilities?
We will certainly be giving thought to those possibilities. John is, of course, has been among the leaders in this area, and your organization has been among the leaders in this area. So when you all speak, we listen. And we consider what you say, because we know that your experiences have been time tested and market tested, and we value the input.
We're a national advocate for legislation similar to what you introduced years ago, Mel Watt. We're standing on a set of principles that prohibit anti-predatory lending practices. And do you have any thoughts for consumers and borrowers in our membership of 600 member groups, that would be useful in pursuing that anti-predatory lending legislation?
Well, I think the market has created an environment, growing number of foreclosures that dictate being more aggressive probably than we would have been had we legislated in this area just a year or 2 years ago. Now it's our responsibility as responsible members of Congress to try to figure out what the appropriate federal standard should be, and we're trying to be methodical about doing that, not reactionary, but thoughtful, and I hope the public won't get impatient with us going through a methodical process to get to the right standard.
Yes, yes. And as they referenced at the end of the hearing, we've only had the HMDA data, the inclusion of income or of product type for, I think she said, 2 years. And that's not really nearly enough to get to results, but we do hope you will be strident and consider anti-predatory lending.
Well, I think anti-predatory lending will become a staple. HMDA has become a staple, much like the Community Reinvestment Act. These are tools that effectively encourage the lending community to serve the communities that they operate in, and that support their institutions. And so they have to be responsible, and we'll try to continue to make sure that we legislate responsibly to encourage them to do so.